Hi friends, and this is Bilal Heather, and in this video part we are actually going to remake this Forex a profitable trading strategy because for some reason when I was recording that video, which I guess you have already watched, for some reason I didn't notice that the video was cropped and some part of this Excel sheet was not visible. So, and also people also complained about it because they were not able to understand it and they wanted a graphical representation of this video. Okay, so I came back with a graphical representation of this video also, and I'm going to talk about this Excel sheet once again for you. Okay, so without wasting any time, let's go ahead and start. I will start with this graphical representation of this strategy in here, where we have a best case scenario for this trading strategy. Okay, but before we go ahead and talk about this thing here, I must tell you that this expert advisor or this strategy actually have a fixed target, and that is, in our case, that is 100 pips, and that you will be choosing based on the pair you're using and based on how much it changes in one direction in 1 week, okay, or in 1 day. That depends on how you will use this trading strategy. Okay, there is a 20 pips step for this. Okay, we'll talk about it in detail when we will discuss about this part here. It has a lot multiplier of 2, it has a trailing stop of 20 pips, and it has a stop loss of 20 pips also. Okay, don't worry about this part in here. And it also increases its lot sizes by this lot multiplier. Okay, you can change this lot multiplier according to your need. Okay, but for now we'll keep it at 2, and now let's discuss about this part here, where this arrow is showing our entry point. Okay, we have chosen our best case scenario for this particular example here, where our market is moving down and down, which is best for a sell trades. Okay, so this is our entry point. This is our stop loss for our first trade, which is 20 pips stop loss, and between this line and this line is a gap of 20 pips, which is our step. This line and this line is 20 pips, this line and this line is 20 pips away from each other, and this blue line here is our target for our first trade. Okay, because we are using 100 pips target for our trades, each of our trade will have this much target, this much trailing stop, this much stop loss, and based on what position in the sequence, it will have these lot sizes. Okay, so before wasting any time, let's go and start explaining it by starting our trade here. Obviously we are not actually starting our trade, but we are assuming here that we will start our trade at this point of time. Okay, so let's say we start our first trade as a sell trade here at this point of time, at this level and at this price. We will have 20 pips stop loss for it, and we will have 100 pips take profit for it. Okay, as soon as we place our trade, the market started moving, and it started moving in our favor, and as soon as the market will reach 20 pips in our favor, we will start another trade. We'll start another trade with 0.02 lot size. Okay, and because our first trade was having 20 pips trailing stop, at this point of time the SL of our first trade should move to the break-even point of our first trade, or okay, keep that in mind also. Okay, now when our market started moving another 20 pips in our favor, we are actually in 20 pips profit for our second trade, and we are actually 40 pips profit for our first trade. Okay, and the trailing stop of our first trade is also moving in our favor, and for the second trade we also have a 20 pips trailing stop, and it also started moving towards the break-even point. Okay, so at this point of time, when we are in our when the market moved 20 pips in our favor the second time, first time it moved like here, it came here, and the second time it also came here, and it is now, our first trade is now at 40 pips gain. Okay, at this point of time we will open another trade with a 0.04 lot size here, and all of these, it will have 100 pips target, it will have 20 pips trailing stop, it will have 20 pips SL, and all the same properties that all the other trades are having. Okay, so we'll keep on doing that if market is moving in our favor until we reach a maximum trades which we have decided for our strategy here. Okay, so if you are using it on a pair which is changes like 120 pips, 140 pips on average in one direction per week or per day, then what you will use, you will actually use 5 trades, 5 maximum trades for that. Okay, because we want to make sure that at least our first trade gets the target. Okay, and if our first trade does that, we already know that all the other trades are actually will be in profit. Okay, the second trade will be in 80 pips profit at this point of time when our first trade will hit its target. Our third trade will have 60 pips in profit, our fourth trade will have 40 pips, and our fifth trade will be in 20 pips profit. Okay, so at this point of time when our first trade will reach our target, all the other trades will be in profit, and actually the stop loss or the trailing stop loss of all the other trades will be at this level. Okay, because it is 20 pips trailing stop for all of these trades, so it will be at this level. So if we reach the target for our first trade, we will be no longer in loss. Okay, we will be no longer in loss because our last trade's trailing stop will be at its break-even point. And now if market moves further down, we will be making more profits, and all of our trades will be reaching their take profit values one by one. Okay, so this was pretty much the best case scenario for our first trade, and let's go back to our Excel sheet and discuss about what will be the profits. Okay, so here we have our first trade will be having 0.01 lot size, our second trade will be having 0.02 lot size, third trade will be having 0.04, fourth will be having 0.08, and fifth will be having 0.16. Okay, so when our first trade is started at this point of time, it is having $0 profit. Okay, and when it started going up, we were actually in minus, but as soon as it started moving in our favor and it reaches this our first level, okay, our second trade is started, and our first trade is in 20 pips profit, which is $2 if we are starting with 0.01 lot size. Okay, and as soon as market goes another 20 pips in our favor, our first trade is in 40 pips take profit, which is $4, and our second trade is in 20 pips take profit, which is $4. Combined it is $8 profit for us. Okay, and at this point of time we'll start another trade with 0.04 lot size, and we'll continue doing that until we reach our take profit target of 100 pips. Okay, I have also described all of these scenarios right here, like if when we are in our first 20 pips, we will be having this much profit. Market going another 20 pips in our favor, this will be our first trade, this will be our second trade, and we are having $8 profit for it. And by the end of not by the end of but when our market reaches 60 pips, then we will be having this much profit, so and so. Okay, so this was the strategy of the sell trades EA. But what can happen during this trading sequence? The market can reverse at any time, even at its first time. Okay, let's say we started a sell trade here, and we were expecting that market will go down and down and down, and it will reach our target of 100 pips. But market started going up, and it hits the SL value for our first trade. Okay, and if market is going up and up, and we were having a sell trades EA on our chart, what it will do, it will place a sell trade whenever it hits the SL. Okay, so if we started a sell trade here and it hits the SL value right here, what this EA will do, it will start another sell trade right at this point of time. Okay, so if market is going another 20 pips up, it will hit SL once again, and it will open one more sell trade after every 20 pips market going against us. Okay, so that's how this EA works. So how we solve this problem of not making these losses when market is going against us? So what we can do here, we'll use another EA or another strategy running parallel to this. Okay, and same as we have a sell trades EA, we also have a buy trades EA. And what this buy trades EA does, it actually places buy trades based on all of these conditions. Okay, these buy trades will also have 100 pips target, they will also have 20 pips step, they will also have 20 pips trailing stop, 20 pips stop loss, and these increasing lot sizes also for all of their trades, just like we discussed here. Okay, so what we can do here when we start a sell trade here, we'll also start a buy trade at the same time, at the same point. So what this EA will do, if market is going against us for our sell trade, it is actually going in our favor for our buy trades. Okay, so let's say if market hits this point here, and the market gives us minus $2 loss for this sell trade, we also have a buy trade here which is running, which started at the same time. In this case